Good day, fellow investors. There have been some very interesting comments and I thank you for that, so please comment. You add so much value to this channel. Today's topics are how to invest in blockchain, because there is an interesting debate developing there, how to turn $6,500 into $1 million, and then I will discuss why I don't invest into insurance stocks. So let's start with how to invest in blockchain. It tells me, okay, to reap really the rewards of the dot-com internet expansion, it took 20 years and it really rewarded only those who invested in Amazon or lately Tencent, Alibaba, but that's for a shorter time. So there is plenty of time to invest in such trends. If the trends really gain traction, there will be time to invest. You don't have to chase those crazy scams that everybody is offering now. So give yourself time. There will be plenty of time to invest in blockchain. On this topic of investing in such high return, high potential multi-baggers, I have made a video about extremistan investments. It's in the card, it will be also in the end screen. And I'll discuss there how, if you give it time, even boring investments, not Amazon's, not blockchain, can make 10, 20, 50 times the return on investment. So if you keep that in mind, so it's a mindset, keep an eye open for such opportunities, you will find even low risk, extremely high potential investments. So over 10, 20 years, a lot of things can happen and you can find that stock that goes 20, 50, 100 times up in relation to what you paid. Watch the video about extremistan and mediocristan investments. It's an amazing investing lecture. Decades. And here I disagree, because insurance companies have a low valuation. Why? Because there is a high risk. And I think it was in the latest annual report that Buffett discussed how, if there is a 4 magnitude, in the US now I'm talking 4 magnitude natural disaster, in comparison to what was happening in 2017 with 3 hurricanes, so 4 times more, then Berkshire loses about 20 billion. He knows exactly what he will lose, and he says everybody else goes bust. And that will happen 2 times in a century. So 2 times in a century, 98% of US insurance will go bust. And everybody is reinsured, so you never know how that chain of going bust develops. So that's why I don't invest in insurers, because the potential for permanent capital loss is huge there. And if I go dig into what they do, what is their reinsurance, I cannot see that. I cannot see the complete chain of insuring, reinsuring, de-risking, and I don't trust also their risk management. They have kids that go to school, use value at risk, plot in the data, and really behave on what the computer says. They don't apply common sense. Buffett does, and Buffett thinks, okay, 2 times in a century I will lose 20 billion in a year, and he's protected for that. Nobody else does it, because nobody else cares about the 2 times in a century potential events. On European insurance, my mortgage is financed from an insurer that gave me 103% of the value of the home I was buying. No down payment, no nothing. I didn't even have a permanent contract yet. It was a flexible contract, later became permanent, but still. So when I see those risks that those insurers are taking, when I see what's going on in the European Union, it's simply crazy for me to invest for any kind of yield. And that's also why the PE ratio is low and will probably remain low, because institutional investors, big money, smart money, sees the risks and understands what's going on. So really dig deep before investing into an insurer. Similarly, Deutsche Bank, you just see it going down, down and down. And the world might also change for those insurers. Just an example here, American International Group, it was trading at 1,193 in 2007, then it went bust, bailed out, now it's okay, a little bit higher, but still, you see what can happen with those insurers, even if everybody thinks stable dividends for 20, 30 years. You never know what's behind that, and that's something I'm not willing to risk my capital for that, for any kind of yield. So the message here is, take a century perspective, Give yourself a few decades for those stocks to become 100 baggers. Really try to expose yourself with low risk, high reward, and check my Extremistan investments, where you can really find low risk, high explosive investments that are not blockchain, cryptocurrencies, or insurance companies. Perhaps the opposite if you short them at the right time, but that's a different story. Thank you for watching, looking forward to your comments, and I'll see you in the next video.